Ladies and gentlemen, good day and welcome to the Tata Steel call. Please note that this meeting is being recorded. All the attendees' audio and video has been disabled from the backend and will be enabled subsequently. I would now like to hand the conference over to Ms. Samita Shah. Thank you and over to you, ma'am.
Thank you, Kinshuk. Good afternoon, good evening, and good morning to all our viewers joining us for this call today. We just had a few announcements to share with you. Before I proceed, I just wanted to say that the entire call today will be governed by the Safe Harbor Clause, which will come up on the screen shortly. The call today is being led by our Executive Director and CFO, Mr. Kaushik Chatterjee. I will request him to make a few opening comments and then we will open the floor to questions. Thank you, and over to you, Kaushik.
Thank you. Good afternoon, good evening to all that who have joined us, and thank you for joining this call. While we will discuss our detailed performance later when the numbers get approved by the board, we had some developments which we wish to update in this call. As you are aware, our European operations in Netherlands have a steel making capacity of about 7 million tons, and we have been engaged in discussions with the government on potential support for decarbonization and transition to greener steel making. At the same time, we've also been proactively taking measures to ensure the operations remain fit for purpose and fit for the transition and continue to generate positive cash flows. However, the challenging operating environment in Europe, including the elevated energy and carbon costs, have weighed in on the steel spot spreads over the last couple of years. The steel spot spreads in Q3 were a multi-year lows of about 170 euros per ton versus an average historical levels of about 240 euros per ton. Given this condition, we had mentioned during the Q3 earnings call that we would essentially focus on controllable cost takeouts, and we have launched a significant transformation program that prioritizes maximizing production efficiencies, lowering fixed costs, and optimizing the product mix to focus on the EBITDA and cash flows. And towards that purpose, we have today announced a reorganization program as a next step in this journey. And we are proposing to move to a new organizational structure that promotes agile ways of working and reduces controllable costs by about 15% compared to the financial year 25 levels. The controllable costs, just to give you a sense, makes up about 40% of the total costs. The reorganization is expected to lead to a loss of around 1,600 jobs, mainly in management and other support functions. We are well aware that this intended restructuring has significant impact on people, but we are committed to work closely with all stakeholders to navigate the difficult path. In the UK, we have recently signed contracts with suppliers for a cutting-edge pickling line, a key component of steel making, and this marks a significant milestone in the Tata Steel UK's journey to green steel making in Port Talbot, and that project is well underway. There has been a lot of news item on the recent tariff announcements, and I just wanted to provide a brief update on our exposure to the US. As you know, US has levied a 25% tariff on all steel imports, and these tariffs have been in place since 12th of March 2025. Separately, there will be 25% tariff on all foreign auto imports and reciprocal tariff of 20% on EU, 26% on India, and 10% on the UK that has come into effect. India deliveries at around 21 million tons make up almost about 70% of the consolidated volumes and are largely consumed in the Indian market. As such, our Indian operations have no direct sales exposure to the US markets, and indirectly there is a very small of almost over 1,000 to 2,000 tons of volume exposure via duct and galvanized wires, another 10 to 15,000 tons exposure in the select specialty steel products on an annual basis. These are on an aggregate basis, this would be less than 0.01% of the FY25 India deliveries. The UK operations, which has a total exposure of about 88,000 tons out of almost 3 million tons portfolio, spreading across packaging, tubes, and automotive. This is also very insignificant in the overall context. And in Netherlands, the downstream subsidiaries, we have downstream subsidiaries in the US, and we send about 670,000 tons per annum out of a total of 6.8 million tons, spreading across packaging, engineering, automotive, and plating. These are effectively a very modest exposure as far as Netherlands is concerned. And as far as UK and India is concerned, there's hardly any exposure to the US. I just wanted to put it across more from a clarity perspective so that the investors are aware of our exposure into the US. With that, I'll close the opening comments and open the floor for any questions if you have. Thank you.
Thank you, sir. We will now begin with the question and answer session. We will be taking questions only on audio today. To join the audio questions queue, please mention your full email ID and name in the chat box. Kindly stick to a maximum of 2 questions per participant and rejoin the queue should you have a follow-up question. We will unmute your mic so that you can ask your question. We will wait for a moment as the queue assembles. The first question from today is from Satyadeep Jain of Ambit. Satyadeep, request you to please go ahead and ask your question.
Audible?
Yes, Satyadeep, we can hear you.
Hi. First question, Kaushik, on the timeline. I know Tata Steel Europe had looked at downsizing in the past, also didn't materialize. So this recent action is in response to the spreads in the last 1 year. Is it something recently that you started thinking about? And when you look at current spreads, where they are, what could be the profitability for Netherlands before this downsizing, and what could be the profitability when all this downsizing happens? So that's the first question.
So, Rathadeep, I will answer it slightly differently if you are okay.
Yeah.
Fundamentally, this is a 1 year transformation program. Since you talked about the timeline, it is not a multi-year program. And this program is focused on multiple areas, which are mostly, if not all, on the controllable side. So this is the elements of this program are mostly on the controllable side, including volume, the material yields, controllable costs like repair, maintenance, employee costs that we have announced today. And in FY26, on a base of FY25, we are talking about in excess, on an aggregate basis, all parts of the program together, we are talking about in excess of 500 million euros.
Because 500 million on 7 million. What is the profitability that you're looking at on current spreads after all of this?
So that's why I said that I'm taking the spreads outside, because spreads neither I can predict nor you can predict if it's a market related spread. So that's why I said on an FY25 base, and this is a cost base that I'm talking about. We are talking about a full cost takeout and efficiency programs across multiple verticals, including on usage of raw material, on the yields, on the commercial product mix, not on price, on product mix, repair, maintenance, and controllable costs, including wages, of about 500 million uptick from FY25. That's the program size that we are chasing for the next 12 months.
Because if I do the maths, Kaushik, if I look at 1,600 employees, you're looking at downsizing in the average employee cost, as per my numbers, is about 80,000. That looks like about $120 million. So a sizable chunk is actually sitting outside of wages. Can you maybe talk more about, if you break it down, repair and maintenance and others, where are some of these bigger cost saving numbers coming from?
So just to clarify, you would know that the process on the employees part is not entirely in FY26. It is a progressive, the actions will be done because that's the consultation process that has been launched. But there is a process that goes through. So the full year impact of employees will come in 26, 27. The actions and the work of the employees will be completed by 26. So you have to factor that in. But as I said, there are multiple areas. For example, if I look at operating areas, we're talking about reduction in demurrage. We're talking about increased pellet production from the pellet plant that we have. We're talking about reduction in blast furnace fuel rates. We're talking about increasing crude steel volumes to hit at 7 million tons. So it's no one magic bullet. We have itemized, programized numbers across areas, across spend heads, and that is aggregating to 500 million plus is what I have just mentioned.
Okay. Just one more question on the future course of action in Netherlands, given the new metal and steel action plan announced by EU and all the other quotas, where do you see the discussions on the entire transition in Netherlands? Some companies historically had been somewhat cautious given the entire spreads, but the government seems to be taking some actions. So, what impact do you see from these actions? And given the decisions you are looking at, one blast furnace will keep on operating for some time. In the light of CBAM, could there be implications on the blast furnace which keeps on operating during the entire 3-4 year period before the other one comes up? So, just on the
So,
overall economics and benefit from all these recent actions that government has announced, and how does it impact your overall transition plan and in the continuation of one blast furnace for 2-3 years when CBAM would be there?
no, so effectively, if you look at it, the Steel Action Plan 2.0, that's been under consideration by the EU, focuses on trade, focuses on CBAM as a means to stop unfair trade vis-a-vis domestic EU players. And essentially, it is in response to what has been happening in the EU, especially in the context of also encouraging and triggering domestic demand in the EU. So these are and with some of the countries like Germany in particular having given huge outlays on infrastructure, defense, etc., it is essential that the steel consumption in the EU is being in the focus, and that's why the European Commission has had a special steel action plan announced, and it is currently under implementation or will start implementing with various policy measures being considered. So I think it is the focus of the continent is to ensure competitiveness, especially given what is happening around the world. Just to explain to you that when you mentioned that one blast furnace operating, it is actually unlike in UK. We will operate both blast furnaces, and then in by 2030, when we move the first DRI EF in place, that's when one blast furnace will get decommissioned, and the second will operate in the phase two. And as you may be aware that our blast furnace, our Tata Steel Netherlands CO2 emission is one of the lowest in the world actually, because in the number two from an overall perspective at 1.6, 1.7 tons per ton of CO2. So the competitiveness is being built, and these initiatives that we are talking about is actually focused on ensuring that competitiveness of Tata Steel Netherlands will continue as we transition into the green steel making.
Just one clarification, Kaushik. So basically, you're suggesting, unlike UK, the entire DRI EF package will come up on a parallel side somewhere, and then once it comes up, that is when the blast furnace will be shut.
That's correct.
Thank you so much, and wish you all the best.
Thank you.
Thank you. The next question is from Sumangal Nevatia of Kotak Securities. Sumangal, request you to please go ahead and ask your question.
Yeah, good afternoon. Thanks for the opportunity. First question, Kaushik, are there any redundancy cost? I mean, very early estimates for this, and when does it hit? Does it hit us in FY26 or once this is concluded in 27?
So the redundancy cost, yes, it is early because today we've just filed the RFA. It will take a couple of months to get to the final number and to the cost estimates because that's part of the consultation process. But it will come in mostly in FY26 because that's when once the finalization happens, that's when it will come.
Okay, and since generally our thought was Netherlands is relatively very efficient across all parameters, so are we also looking to mothball some downstream or some parts of the business along with employees?
No, on the contrary, we want to actually ensure that all our downstream businesses remain more competitive and become more productive in terms of our operations because once your upstream costs are significantly tight and competitive, it flows into the downstream. So we don't intend mothballing any. We've been restructuring in terms of the people restructuring, the organization, product mix, location restructuring, but we're not getting out of any segment. On the other hand, we want to be more competitive downstream.
Understood. Understood. One question on our negotiations with or rather discussions with the government for a subsidy package. What is the timeline that we should expect here? And I mean, I mean, the ask is somewhat similar to what uh, was in UK, or for Netherlands, it is something very different.
So as far as the timeline is concerned, I think it is currently ongoing. It's not just between us and the Netherlands government, it is also the European Commission, which has to also vet the proposition of the Dutch government in what they want to support us with. So it's a tripartite instead of in the UK, but we see over the next few months, more around by the mid of the year to come around with a joint letter of intent, and that is fundamentally the framework. After that, there will be the detailed negotiation on the agreements. And I think because it has to also go to the parliament and it will go to the cabinet and so on, because it's a large funding support and policy support. It is not just funding support only. And there are multiple elements to it. As far as the UK comparison is concerned, I think given the issues involved here, it is a lot more complex than in the UK for a simple reason that we are here looking at a much larger configuration because it also has a DRI plant. We are also looking at health and safety benefits and environment benefits, so all three together. So it's a composite project, unlike in the UK, which was effectively a EAF project. So we are looking at all of these getting stitched over the next 3-4 months, and our pre-engineering study is also undergoing. So we'll get a better sense of the total outlay, which is also required for tying up with the government funding support.
Got it. Got it. Just one last quick question. I mean, since we have you, as far as UK operations are concerned, what sort of timeline are we looking to achieve cash break even there? Because I think
I remain in the last call. I've given deadline not for just uh, for yourselves or for the investors, but also internally. I think second quarter is where we are looking to get into that zone because we've been negative EBITDA. So it is just not a EBITDA issue, but also cash issue. We're doing well in cash. In the last quarter, we've been taking a lot of cash actions. So we will move into that second quarter zone is we still believe that we will be able to do. The markets have been, as you would appreciate, has been disruptive because of various other stuff, but we
yeah,
remain focused on getting it done.
got it. Thank you so much and all the best.
Thank you.
Thank you, sir. The next question is from Amit Dixit of ICICI Securities. Amit, request you to please go ahead.
Yeah, hi. Good evening, and thanks for taking my question. Just a couple of questions from my side. One is, just a clarification when you say that
Amit, sorry, it's not very audible. Can you speak up a little? Thank you.
is it better now?
Slightly.
Yeah. So the question is mainly on the clarification that you mentioned that the total benefit would be in excess of 500 million euros. Now, as I hear, it would flow essentially in 2 years, FY26 and FY27. So, how much of it? I mean, if you can give a ballpark number, I know you said 15% over FY25, but how much of this 500 million, if you can just say, will flow in FY26 and how much in FY27? And will FY27 be the year, maybe end of FY27, when we will have on a run rate basis entire 500 million euros flowing in?
So Amit, just to clarify, what I said is the total transformation program. And the employee cost or employee efficiency part is only one part of it. So the total cost improvements vis-a-vis FY25 in FY26, which is the year we've just stepped into, will be in excess of 500 million. That's what our target is, which includes the parts of the employee cost benefits also. And subsequent year, the full year impact will come in. So this year target that we are looking at across operations, maintenance, employee cost, other cost, uh, commercial value added of the product mix, all of that taken is what we are targeting is in excess of 500 million. So just to give you the clarification, the people cost part will flow in this year, but also flow in the full year basis in FY27.
So what is the total expected benefit? I mean, your best guess number at this point in time will work.
On the people side,
The total, I mean, 500 million in FY26 and FY27, how much it can be?
so 500 million will be FY26, maybe another 50, 60 million best case to be added in FY27 because of the people effect itself.
Great. And the second question is essentially on the timelines, not in terms of people, but in terms of the other things that you spoke about, for instance, increasing the pellet production, crude steel production. So what kind of timelines can we pencil in there?
Almost on a secular basis across the year, FY26.
Okay. One last question, if I can squeeze again on UK. There were certain timelines in March that that the redundancies would be complete. So what is the update from there?
So that's going as per plan, and I think when we give you the full year's numbers in a month or so, I think we will go into the full details. But all that I can say is that as per plan mentioned in the Q3 call, we are on target as far as people numbers are concerned in UK. That's going as per plan, as we had announced earlier.
Great. Thank you so much and all the best.
Thank you.
Thank you. Before we take the next question, I would like to remind the participants to please limit your audio questions to two per participant. Should you have a follow-up question, you are requested to rejoin the queue. The next question is from Indrajit Agarwal of CLSA. Indrajit, request you to please go ahead.
Hi, thank you for the opportunity. Most of my questions are answered. Just on the plan of action, right? Other than employees, there are a few other things that you mentioned, Kaushik. So for any of the other activities, do we need any kind of approvals or other than the board approval, of course, from the government or from the related parties, or is it we can start on it from day one itself?
No, we don't need any approval because these are essentially operating levers and controllable actions, which is why the whole program has been focused more on controllables rather than be it the market or be it anybody else. So only the employee process is a well-defined consultative process that we have to go through and we will go through, which is what has been launched today. But as far as the other areas are concerned, which are largely internal to us.
And when we look at the roadmap, you said the benefits will be secular through the course of the year, and we are not getting out of any of the subsegments. So, can there be any temporary disruption when you, let's say, increase your crude steel production or improve the efficiency of the furnaces? Can there be like in 1 or 2 quarters where we see production to be lower than the usual run rate and then picks up meaningfully in the subsequent quarter?
So we normally have a annual, which is true for any steel company. We have it in India, we have it elsewhere also. Is a normal shutdown route. So normally when there are shutdown, like for example in India, we are going through the G furnace shutdown due to the relining. That is the volume impact that comes in. But in Netherlands, we don't have that because we've completed the last major relining 2 years back, and therefore all assets are firing as it is planned. There's not a problem on that front. These are actually all optimization projects and improvement and efficiency projects. So there are multiple projects under this program, and each of them are tracked. When I said secular, and I think I was answering the question that what's the timeline to deliver. I think it is each project will have its own cycle time to deliver, but overall we should keep seeing improvements on quarter.
Sure. Thank you. That's all from my side.
Thanks.
Thank you. The next question is from Rajesh Majumdar of B&K Securities. Rajesh, request you to please go ahead and ask your question.
Something else actually relating to the safeguard duties. In your opinion, are the safeguard duties going to come at the right time, or is there any discussion that is happening in the circles which makes you believe that it may not happen, or what is your assessment of the same?
You're talking about the Indian safeguard duties?
That's right. That's right.
Yeah, no, I think it has to go through its own process. There are no other, I mean, the government wanted certain actions to be done by the industry, which the industry is complying with, but nothing beyond that I can give any update on.
But there's no reason to believe, as per your understanding, that it will not come in.
At this point of time, yes.
Okay. So my other question is, while you gave us the direct impact of the US tariffs on your Euro business, is there any indirect impact of the same in terms of the overall, say, for example, Tata Motors not selling to the US and so on and so forth, which you, in your assessment, can lead to some significant decline in volumes? Because while we see the spreads are very strong today, is the market kind of anticipating a drop down in demand due to the secondary impact of the US tariffs that can lead to a drop in the volumes?
I think the second order impacts are very hard to crystallize, to be honest. And we have to, each segment will have to assess that. And rather than giving a very prophetic view on any of them, I would rather refrain from talking about any second order view because that's also changing on a day-to-day basis.
So on the ground impact is not visible as of now. Is that a right assessment?
Yeah, not at this point of time. Yes.
Okay. And sir, if I could sneak in a last question, and this is related to your iron ore mines where the lease expires a few years hence. Has there been any action on the same in terms of new mines or acquiring new mines, or what will be our status of integration, say, post FY30 on the leases
So
expiring?
Rajesh, let's discuss this in the annual call.
Oh, sure. Sure.
We can be better. We
Sure.
can talk about it during that call. Today, I thought it was more a specific item to discuss.
No, not a problem. Not a problem.
Thanks.
Thank you. The next question is from Tushar Ragatate from Kamakhya Wealth Management. Tushar, request you to please go ahead and ask your question. Tushar, we are unable to hear you. Please speak up if you're so that we can hear you clearly and go ahead and ask your question.
Yeah, am I audible?
Yes, we can hear you.
Yeah. So just wanted to know, most of my questions are answered. Just wanted to know your Kalinganagar plant. How do you see that ramp up happening?
I wish we discussed this again in the annual presentation, because that will be the right forum. This being in some sort the silent phase in the performance, I would rather restrain. But it is performing. All that I can say as a headline is performing. The ramp up is as per plan, and we are looking forward to increasing our production next year too.
Fair enough, sir. And sir, due to this tariff turmoil and the supporting duty from India, how do you see that the prices going forward? Your view on that?
So I think we have seen in recent times improvement in the prices in the last month or so, and we are hopeful that the with more spend on the ground, the India level, by the government and various other demand kickers coming in, it should hold. But as I said, I would restrain in this call to talk anything about markets or prices, because it's a very specific call on the Netherlands situation.
Fair enough, so that was helpful. Thank you.
Thank you. The next question is from Giuseppe Arduini. Giuseppe, request you to please go ahead and ask your question.
Morning. I would like to have a better understanding of at what stage are the negotiation with the Dutch government are.
Yeah, so the discussion with the Dutch government is very active and intense, and so is the government's engagement with the European Commission. And we are at a stage where there is a lot of questions and answers and clarifications on multiple parts of the project, be it on the configuration, be it on the assumptions for the future, be it on the phasing of the capex and the underlying economics. So there is a lot of engagement happening. In fact, been happening over the last 5 or 6 months now, and we are at a stage where we believe that we will get into a more specific position over the next few months.
Thank you, sir. Before we proceed, I would like to remind all the participants that we are taking questions only on audio today. So I would request all the participants to please limit their audio questions to two per participant and rejoin the queue should they have a follow-up question. The next question for today is from Ritesh Shah of Investec. Ritesh, request you to please go ahead.
Yeah, hi, sir. Am I audible?
Yes, you are.
Yeah, sir.
Okay.
Thanks for the opportunity. Sir, a couple of questions. This 1,600 employees is versus a base of how many employees? Is it 9,000 or 12,000?
So the 1,600 employees are on the base of 9,000 in Imaudan. The 12,000 is the total number of employees, including the downstream business, which is outside Imaudan.
Okay. So if one had to, so I was just looking at the employee cost number. I understand it's broadly around 950 million euros. Should one assume, say, because of this particular exercise, the saving could be, say, around 160, 180 million euros?
Ballpark, yes.
So the balance 320 will be because of the other heads that you have indicated.
That's correct.
Right. And sir, when we look at the cost base broadly, it's roughly 2.5 billion
Just to
euros.
tell you that all the impact will not on the people will not come in this year, because the time that goes off, 3 months of consultation, 4 months of consultation, so the full effect will be in 27 as far as people are concerned.
Great. And sir, what you are effectively also calling out when you indicate 500 million euros is ex raw mat, 20% of the cost base is something that we are looking to take out. Uh, is that a fair assessment?
On the total cost base, yes.
Excluding raw mat.
The raw
Yes.
material and energy costs.
Energy.
Okay, okay. And sir, the reason again to ask is basically Netherlands was it is one of the finest assets globally, and still we see incremental scope of improvement. Is there anything different on the technology side, or are there any specific variables that you would like to highlight? You did indicate about pallet blast furnace rates, demurrage, but is there something bigger than that which we should be aware of?
So there are I just give you a couple of examples. I think what this comes out also out of our internal benchmarking amongst all our sites, including India. And we are looking more and more in terms of which is the best practice in which site. And many of these ideation has happened by working as one entity across all geographies. So that is also one ideation that has happened. Many ideas have come out from there. And it is also about what was the best ever performance on the KPIs in Imaudan and how can we get there if we are not there at this point of time. So it's a multi-pronged approach on ensuring that we, from a cost point of view, we become one of the lowest and more efficient cost plants as far as Europe is concerned.
Sure. And so last question, I think in the press release you have indicated DRI and EAF. Sir, my concern was specifically on the electricity cost. Neighbors, Germany, France, they continue to use coal, nuclear. So how do you see network cost and electricity cost for us going forward from a competitiveness standpoint versus peers in the region itself?
So one of the, as I said, that our discussion with the Dutch government is relating to the funding support as well as to the policy support. And one of the chapters in that conversation is also about level playing field. And this level playing field essentially relates to policy support to ensure that the energy cost and other related costs are the same as enjoyed by our peers in EU27. So that is also another bucket of conversation that we are doing. It's not just the funding for the project or the financial support for the project, but it is also about getting the policy support with relation to what is a level playing field in the euro area. So this is where the cost of energy and the various other costs, ancillary costs, do come into picture. And what is the policy that we would desire that the Dutch government looks at, which sometimes some of them actually helps the entire industrial space in Netherlands, not just Tata Steel Netherlands or steel, and ensuring that the manufacturing competitiveness in Netherlands is as good as anywhere else in Europe.
Sure. Sir, just a follow-up, a last one. Sir, when you say level playing field, uh, are similar clauses have likes of Arcelor or Thyssen? They also had similar clauses when they got the subsidies from Germany or I think SAP from Sweden. Is it something in parallel or is it something extra over and above that we are looking at over here?
This is not linked to the funding. This is a separate competitiveness that is a bilateral discussion between the government and us. And we bring this up because we are a large enterprise in Netherlands, and we believe that to enhance the manufacturing competitiveness in Netherlands, we need policy support, which is equivalent to the same that is there in any other countries in euro area in case they are inferior to them. So that's why we bring it all under one level playing field basket.
Sure. Thank you so much for the answers.
Thank you.
Thank you.
Thank you, sir. The next question is from Ashish Kejriwal of Novama. Ashish, request you to please go ahead and ask your question.
Hi, good evening. Thanks for the opportunity. So, two questions from my side. One, how much total carbon emissions are available free for Netherlands year-wise, if you can tell?
Carbon emissions are utilized within
So,
Netherlands itself.
no. What I'm trying to say is there any free allowance for carbon emissions where we don't have to pay anything, and beyond which, if you emit it, then we have to pay a certain amount on that? You have to buy from the market?
Yeah, so if you are aware of how the EU ETS works, there is a certain amount of free allowance, and there is based on the production numbers
Yeah.
of the previous 12 months, and then there is, and that free allowance is coming down as per policy across Europe. So the delta of that is what is purchased. So there is no free allowances for trading or selling, etc. And that is essentially the reason why the whole decarbonization happens. If the free allowances was equal to the emission emitted allowance, there was no incentive or no trigger for decarbonization to happen. As per
So,
the EU policy, the free allowances will keep coming down. And as the free allowances keep coming down, the company has to keep buying the balance allowance, and therefore the trigger for the decarbonization project.
so that's what I'm asking, sir. Because for example, in FY25 at 6.75 million ton, we may have emitted around 11 million ton of carbon emissions, and part of it could be free. So how much we have to purchase, like in FY25, and the way you said that it will be falling going forward, incremental, assuming because production is not going to increase, how much we have to increase purchase forward.
Understand. So those questions, as I said again, that when we discuss the FY25 numbers, I'll be very happy to give the details of that, because it's more a performance driven kind of outcomes which we need to do. And I'll also talk about the 26 plan, because those will go hand in hand. I would refrain from doing that in this call, but happy to do that when we discuss the annual numbers.
So second question is, when we are saying that we are going to save more than 500 million euro in FY26, and obviously 181, 200 million is on account of employee cost, which can happen only in second half. So when can we expect this 300 plus million euro to start hitting in our P&L? Which quarter we can start seeing that numbers coming in? And obviously, secondly, as Ritesh also asked, we have been one of the efficient plant in the world, or at least in Europe. And all of a sudden, what other parameters we identified, which gives us a confidence that we are going to save at least 320 million euro besides employee cost in a year, and can it be sustainable?
So first, a general question, when the last couple of years in particular, especially after the Ukraine war, there has been a fair bit of inflationary impact that has crept into the costs because of the way in which the gas prices have increased, because of the way in which inflation in Europe has impacted. A lot part of the costs have become impacted because of that. To offset that, we undertook a detailed benchmarking exercise across all plants, as I mentioned. And these are operating KPIs which we want to actually improve and make it more efficient, which has a euro number to it, which adds up to that 500 minus the employee cost numbers. And many of this, for example, as I said, repair maintenance is one cost. The way you procure stores is the other cost. And there are many others. I mean, we can have a separate call itself to talk about each of them, but there is a significant amount of savings program that has been identified, which is to look at things which have not been looked at in the past. And that itself gives us the opportunity to reduce cost and make this transformation program more effective. And therefore, it is not that we are looking at ideas which cannot be implemented. This 500 odd number are ideas which can be implemented and will be implemented with administrative pressure. And we will be looking at this realization more to start coming in from the second quarter onwards, because the first quarter will go in, as we have already started this 1st of April. We are looking at these ideations, putting in place the program management, getting the tracking done. So first quarter will go in that, but from the second quarter onward, we will be in place to demonstrate, and I will make it a point to give you a separate number on a quarter-on-quarter basis on these improvement programs.
That's great. So hopefully, sir, this will be sustainable, not changing every year much due to the macro factors.
It should not be affected by macro factors. It is controllable cost and it is structural in nature. That's been our purpose of approaching this.
Sure. Thank you. Great, sir. All the best.
Thank you, Ashish. We will take one last question, and I will just request everyone, because I can see some questions in the chat, to please restrict questions to the topics we are discussing, and broader questions on performance, etc. we will discuss in the call, which we do about a month from now. So just over to the last question. Kinshuk, you can pass it on to whoever is the next person.
Yes, ma'am. And the last question for today is from Aditya Velekar of Axis Securities. Aditya, request you to please go ahead.
Yeah, my question is with regard to what is our through cycle EBITDA per ton for Tata Steel Netherlands, and if you can quantify what will be the ballpark impact of this in directionally or on our EBITDA per ton.
So Aditya, I will park this question again, and I will be very happy to tell this in May when we are coming with the numbers. But all that I can, the reason honestly why we wanted to have this call is when you look at the press releases and various other articles which are written, you should not be in the dark. And we thought it would be a good idea to give you a full sense of the transformation program that has been launched today, rather than you leaving to speculation and deriving anything. But performance numbers, please hold for another month, and then we will come back when we present our full year numbers.
Sure, thank you.
Thank you. Thank you, Kaushik, and thank you all our participants for joining us and for all your questions. We hope this call helped clarify some of the doubts you might have. Thanks again, and we connect maybe about a month or so from now when we discuss our results and the full year performance. Thank you, everyone.
Thank you so much.